What's up, guys? Mr. Solution here. So I'm about to take a trade on futures. Okay, that's Ethereum. I'm about to trade Ethereum on the futures market using FTX Exchange. And please, if you've not registered an account with FTX, I encourage you to do that as soon as possible, and you can use my referral link or my registration link at the description section of this video. Okay, go there, register, and then you have the opportunity to join my community of traders. Okay, and then if you have any question, any concern, any problem you want us to sort out together, you can reach me through any of my social media channels, my WhatsApp, my Twitter. Okay, and then my contact me too on Instagram. All of these links will be at the description section of this video, so you can always contact or reach out to me. All right, so I'm about to take this trade on a futures market. I'm about to trade Ethereum, so I decided to record it live. And then this is the price action of Ethereum already. This is what the price is doing. And okay, to take a trade, first of all, I have to do my technical analysis. I don't use indicators. I'm more of an analyst. Okay, I'm more of a technical trader, so I work with what the chart is doing in the price action coupled with the technical analysis. Okay, so let me just do a little analysis on this by pulling up my trend line. Okay, I'm drawing this following the price action. Okay, I'm drawing this, and then next thing is what I have to get this as well. And then if you check my time frame, you discover that what I have here is 1 hour. Why I'm using a low time frame is because I am a scalper. I hardly stay long in the market, except maybe I want to hold the coin for a very long time. So because of that, I normally use 1 hour as my long time frame, and then for me to go to the lower time frame, I will switch to 15 minutes time frame. Okay, and then there is already a method to this. I taught my students already about the 4 to 6 factor that learns from Alexander Elder, how you can combine time frame. So because of that, I usually combine 1 hour and 15 minutes. 1 hour will be my long time frame, and then 15 minutes serving as my short time frame. Okay, so having drawn the chart, having looked at it, discover that both of them, both the higher time frame and the lower time frame, all have the same thing. Okay, they are showing me this particular chart pattern called what? An ascending triangle. Okay, and what does an ascending triangle mean? It actually tells you a story. As I always say, market is all about stories. If you're able to get the storyline of the market, you can comfortably flow with it. You only lose money, or maybe you make erratic mistakes when you forget when you leave the story that the market is telling and start telling your own story. But if you can fine-tune yourself and flow along with the story that the market is telling you, there's no how you lose money. It's not like you will not lose, but then your loss will be minimal. Okay, so now I've drawn this. We've seen that this is actually an ascending triangle. And then what does an ascending triangle tell us? It tells us that, okay, assuming that this is where sellers are. Okay, there are many sellers here, and then the sellers are only selling at let's say $200, but here these are buyers at every point in time. They are willing to increase their buying power. At a time they were willing to buy at only, let's say, 1,000. Then they are willing to buy, okay, let's say they are willing to buy at $20. Then at this point they were willing to buy at, let's say, 25, okay, or 50. Okay, they were willing to buy at 50, and then at this point they were willing to buy at, let's say, 45, and then they will keep on changing the price. Their price is never static until it gets to a point where they will be willing to buy at that price that sellers are selling. Okay, they will be willing to buy at that $200 that sellers are selling. So when that happens, what happens next? The remaining sellers will kind of take their price up. Okay, that is where we normally get a breakout. That's how a breakout occurs, when the price that we had before, when the sellers decide to take it up a notch, a notch higher. That's how a breakout occurs. So how do we trade an ascending triangle? Okay, we pull up our trend line once more. We take the distance between this and this, take the distance between both. Okay, I just want to get it clearly. Take the distance between there and there. Okay, assuming the breakout is to occur here, so what is our price projection? What are we anticipating? Just leave it as it is, take it up to this level again, assuming we have to get that breakout. Okay, so what it means is that we are expecting here. Okay, this is where we are expecting the price to get to. We are expecting the price to get to. That's very level. Let me use horizontal line once more. Okay, so this is actually a target. We are targeting here 1430.3. That's the target. But you know, this thing will not happen once. It can't just break out and then start going up like that. No, it doesn't happen that way. It will, you know, kind of cyclical movements. You go up, it come down, it go up, but eventually it's gonna get to this very target we are aiming at. It definitely get to this very target. All right, so now what would I be doing? Remember, I am just trying to be very I'm trying to be very careful. I don't want to jump in, I don't want to FOMO. Okay, I want to be very certain that this trade I'm taking, I'm very sure of it. It's clear, the breakout is clean, nothing is gonna hinge me, so that my position will be clean as well. Okay, so to make sure I get a very clean position, to make sure I don't get a fake out, like I don't jump in using a fake out, what would I be doing? I would be using what they call a stop limit order. Okay, I'll be using a buy stop. Okay, how does a buy stop work? As we already know that we are anticipating a breakout. If you eventually get a breakout, where next is the price gonna get to? We are looking at this very point. Okay, it could get to this place now, it will get to here, it will get to 1182.5. okay, and then if he eventually gets to 1182.5, where is the next step we are also anticipating? We are anticipating another target to be around 1249.3. That's another target. So because of that, I'll be using a buy stop order. Okay, a buy stop limit order. Okay, so my entry would be here now. Okay, I don't want to buy here, I don't want to buy here, I want to be buy at the point or price where I am very certain that price is okay, I want to buy at the point where I'm very sure that price has clearly, you know, gone above this resistance. This is actually a resistance. Okay, I'm very sure that the price has gone above the resistance. It has clearly and cleanly defeated it. So I want to use a buy stop order. Okay, so if I'm taking this trade, my entry will be what? 114.6. okay, so I go right ahead and go switch to, okay, it's already here, it's already on buy stop. Okay, I go right ahead and put it there, put my entry at what I want to put my entry at. Where did we say again? I want to put my entry at 1184.6. That will be my entry. Remember, I'm pulling out. Initially we had a limit order, so I will just go to these very limit orders. Okay, change it to what stop limit order. Okay, then I put my trigger price at, the trigger price will be 1186.4. I guess that's what we have there. Or am I making any mistake? Okay, 1184.6. 1184.6. Let me adjust it. 1184.6. okay, and then my limit price, I could just put it at 1184.2 or 0. It doesn't matter. So what it means is that, okay, what it means is that if price eventually gets to 1184.2, that's my limit price, my trigger price will be triggered. Like, this price will be triggered. As it stands now, this thing can be found in the order book, but if price eventually gets to this 1184.2, this one will now come to the order book, so that if it gets to that point, I will not buy. Okay, remember, like I said, I want to be very sure that what I'm buying is a clean breakout. I don't want to buy a fake out or anything. I want to be very sure that, you know, what I'm buying is clean. Okay, you can equally still adjust it. Okay, you can still decide to take it up, as the case may be, just up to you, but just be very sure that the price you want to enter at is very clean. Okay, and you don't want to get any breakout, any fake out or anything. Okay, so having done that, I'll come again. Then what amount of my money do I want to use to enter the trade with? Maybe I want to use everything I have there. Okay, I drag this to the highest point. Okay, and then I go right ahead and click on what, I'll check if everything is in order. Yeah, I click on buy. Okay, yes, place order. So what if you now drag this thing down again? Look at my trigger orders. Okay, I actually have a trigger order, which is this. So if price gets to 1184.2, my trigger price, okay, my price will be triggered. Okay, it will come to the order book, and it eventually gets 1184.6, then I will buy. Okay, so after I have bought, okay, after I must have purchased, then what is the next thing? The next thing is for me to know where my stop loss, where I should be placing my stop loss. I'm trying to be very very careful. I don't want to take unnecessary trades. Okay, I just want to be very very certain of what I'm doing. Okay, then I look at the chart once more. Where do I think my bias will be invalidated? Where do I think my bias will be invalidated? Okay, here this is actually a support level here. This is a support level. So if what conventionally what people do is that they want to put their stop loss at the support level. No, that's a wrong way to trade. Okay, because at this support level there are many buyers waiting to buy at this very point. So you don't want to put it at the price where at the point where alternative energy or alternative force or where many buyers are willing to buy. That's why sometimes you put a stop loss on a trade and then the trade gets to that very point, takes you out, and then reverses back and start going up towards the direction of your buyers. Okay, so you don't put your stop loss at the point of maybe a support or resistance. No, you have to, okay, you have to give it a little space. Okay, you have to give it a little space. So I would want to put mine here. Okay, I would want to put my here. Alternatively, there is an indicator for that helps us to decide on where to place our stop loss. Okay, the name of the indicator is ATR, also called average true range. Is one of the things that can help you to know where to put your stop loss. Okay, you just go right ahead here, search for ATR, search for ATR average true range is an indicator. Okay, pull it up. We are not talking about this. I wouldn't want to talk much about the technicalities involved in this, but just know that ATR is actually one of the indicators that will help you to know where to put your stop loss and all that. Okay, this is the ATR. Okay, you can work it up and all that. Maybe in subsequent videos I will do more about it, how to use the ATR. This is not the purpose of this. All right, so let me remove this. All right, so okay, let's say eventually I enter the trade and then I want to put my stop loss. I should be placing my stop loss at 1184.2. okay, no, that's still very close. Okay, I want to place it at this region. Okay, I'm placing at 1154.9. That's clean. Okay, that's clean because what I'm projecting here, if you if you check it, you see that my risk to reward ratio is actually cool enough. I'm willing to risk this very amount. Look at what I'm aiming at. I'm aiming at this very point. Okay, so then like I said, like we all know that price doesn't just move straight like that. Sometimes it's like a sinusoidal movement. Okay, it comes up, it goes down, it comes up, it goes up, but eventually it will always get to the very point of our projection. Okay, so having known that, bearing that in mind, my first target would be here. I could just decide to maybe aim at this point first. Let me change this to another color, maybe yellow. Okay, change it to yellow color, and then my next target again would be around this region. Okay, let me change this to another color, blue. Yeah, then the next target would be here. Okay, I would also have another target at this point. Okay, let me change from blue to what other color, white. Yes, then okay, and then finally I will have my last target here. Okay, so what it means is that these are the places that I'll be looking out. Okay, I'll be looking out for, these are the places that I'll be watching, these are the places or the targets I'll be anticipating, and then using my normal method I could just be locking in profit as the case, okay, as the case may be, but eventually it will have to get it to this very point. This is my final target, but remember there's a caveat. The caveat is that we want to see a very clean breakout. Okay, if we backdate this chart, if we go back to see the analysis I did earlier on this same Ethereum, where I said it was gonna get to $1,300, and it of course eventually did. And what method did I use? Same method I used here. Okay, look at it here. Trend line, distance between this and this, took it up for the point of breakout. This was where I saw my breakout, okay, occurring, and then you see, look at the target. You can see the white line. That was the target. That's 1,357. But then my projection was 1,300, and immediately got to 1,300. I exited the market. Okay, and then we said it before that it doesn't happen like that. It keeps on, having a series of cyclical movement and all that, but eventually it did get to it, but it got to it at this very point in time. Then immediately it got to this point, I left the trade. I just exited the trade because it had met my target. So one of the things we should avoid is, maybe you want to stay long in a trade, avoid using a very high leverage and also your position size. So because I'm looking forward to staying very long in this trade, I do not want to, uh, put myself at a position where I could get kicked out, or maybe I could get liquidated. Because of that, I would reduce this my leverage to 3x. I could reduce this to 3x because I'm aiming to stay long in the trade. Okay, this is my final aim, this is my final destination, but then I'll be following it, okay, sequentially, and adjusting and locking my profit as the trade goes. All right, so I hope this has been educative enough. If you've not subscribed to the channel, kindly hit the subscribe button. Or maybe there are people who are still trying to find their footing in anything cryptocurrency trading. You can refer them to this very channel, or maybe reach out to me, my WhatsApp, my Twitter, my Instagram, or even on Telegram too. I'm active on all social media platforms. Okay, till I come your way again, I remain your man, Mr. Solution.